Good morning, everyone. Welcome to Windsor Brokers live daily market outlook for Monday, 8th of October 2012. I hope you are all now in. We are not waiting for any other person, so we can start. We are slightly late this morning due to some technical issues, and also I was waiting for everyone to connect. So basically the week starts, Euro starts week at the back foot in a weaker tone following last Friday's extension of the rally to 130.70. This was the high seen on Friday. Acceleration was seen on rather disappointing U.S. jobs data when that pushed the dollar lower, and the euro hit the fresh high at 130.70, but unable to hold the gains. Returned for a still positive closing of the week above 130, but overnight extension on the rather thin market as Japan was out for holidays, and quite low volumes pushed the single currencies price below 130, handle 129.80 seen so far, with immediate threat at 129.70. That's initial support that the pair is approaching now. Also sterling lost the grip after a brief break above 162. 162.16 was seen the highest level last Friday, and then subsequent quite sharp reversal, nearly fully retraced, and it's still moving lower. A loss of 162 and the 161 overnight, now directly threatening 160.66, our key support. Dollar yen also losing traction after peaking at 78.86. Gains were capped under 179, and then now again more weak sentiment, seeing a possible extension down towards our supports at 78.30 and 78.00, as 78.50 has been lost. Dollar Swiss remains well supported in trading from last Friday, when it found support at 92.73. Extension seen so far to 93.43, just ahead of 93.50 resistance. More of this we are going to elaborate on our technical part, with of course your questions to come later on. Just to mention that commodities again remain under heavy pressure, as crude oil nearly retraces nearly 3/4 of the latest rally that peaked at 91.81, currently holding below $89 per barrel. 88.70 was the lowest seen during the Asian session, as well as yellow metal being under pressure after posting a fresh high of the year at 1795.70, currently trading at 1770, ticking down to 1766, and threatening a strong support area, with being dented already 1770 and 1763. As said, quite a negative sentiment return back on the actually quite strong profit taking on the last week's rallies. Something like this was more or less expected. Now it's a question whether euro will is going to extend its weakness, or it's just a corrective action of the broader rally from end of the correction, basically of 131.70 to 128.00, or it's another lower top and possible extension lower. Near-term indicators for euro remain quite negative at this point, and seeing more prospects towards the downside. The euro might find some support on a quite good German data released this morning, as exports rose unexpectedly in August. Also, the China services PMI showed a great recovery to 54.3. This was also rather not expected. Since we are there, let's take a look in our calendar. As said, the China's service PMI came to 54.3. From other releases, New Zealand, the job advertisement came at negative -2.8 compared to -2.3 previous release, while Swiss unemployment rate, despite forecast at 3%, remained 2.9% in September compared to 2.9% in the August. As said, the German trade balance also increased. The trade surplus moved to 18.3 billion euros compared to 16.1 in August and 15.8 forecasted. The Swiss CPI has already been released. We don't have it yet in the calendar, but I will give you the monthly release is 0.3%. Forecast was 0.3%, while yearly release is minus 0.4%, equivalent to the forecast, the same for forecast. This Monday actually, it's not much in the calendar, but still we have the CPI from Switzerland that's already been released. The Centix investor confidence for October of Eurozone is forecasted still in negative territory, minus 20.6, a slight improvement in October compared to September's minus 23.2, and I do apologize. As basically, and the industrial production at 10 o'clock GMT from Germany, minus 0.4. It's expected to dip compared to 1.3% in July, and that will be all. The rest releases are coming in the late afternoon, late evening actually, and will be coming according to GMT time into the. According to our local time, will come into the next day. So we will be talking about this tomorrow morning. As said, negative sentiment that drives euro lower from last Friday's peaks still persists. We're going to take a look now at our technicals and see the latest movements. As said, the single currency is at the back foot of its last Friday's peak at 130.70, retracing approximately 38.2% of the entire 128.00 to 130.70 move. It's facing now very strong support at 129.70 zone, following loss of important and psychological support at 130.00. 129.70, we have the previous peak of 2nd of October. We have a 38.2% retracement, and also is reinforced by valid bull trend line drawn of 128.00 through 128.76 and 128.86 levels. So it's coming now under pressure. A break of this level could be quite dangerous for euro. It could trigger further. This is seen as a break point basically, and could trigger further retracement of the near-term rally from 128 that peaked at 130.70. As said, the price holding below the moving averages, and the 10 days one already below the 20 days moving average, and now attempting below 55 days one. That keeps additional pressure on the pair, with the indicators all in the negative territory, approaching the oversold zone, yet not in, but possibility of some corrective action not ruled out. As the price now ticks lower, we'll see whether the 129.70 will hold at the first attempt. On the 4-hour chart, another support, the indicators are pointing lower, still in the positive zone, but pointing lower. Stochastic is already well down, so this signals even further extension lower, and as said, break below 129.70 sees the next also important level, approximately 129.40, where we have the 50% retracement, and the previous peak of 1st of October 2012, loss of which would be quite risky, as will bring another important level, 129.00 round figure support, and the 61.8% retracement. And basically this could be a threat for a further reversal, and will likely signal a lower top at 130.70 as a part of the down move from 131.70. A key support remains at 128.00, where is also the 200 days moving average that so far contained the dips from 131.70. Now at this point there was a question whether this move was just a correction of the larger uptrend, or it's beginning of the fresh downtrend of the euro for deeper reversal. Basically we need to see the losses approximately below 129 and the more important 128 to confirm the failure swing at this point, and the open way for deeper reversal, where we have immediate support at 127.40. That's a 38.2% retracement of the larger 120.42 to 131.70 ascent, reinforced by bull trend line drawn of 120.42 through 121.33 and 122.54. So the main focus in the near term now lies at 129.70. That has already been cracked. The pair is attempting lower at the beginning of European session. Just to mention also closure of Japanese market as well as America being closed due to Columbus Day holiday might show some thinner volumes in the market, and this also could be a trigger for some stronger movements. Usually on the low volumes and thin markets, sudden moves are not excluded. And as said, being 129.70 being cracked already, we are looking for a 129.40 and 129.00 on the downside. Basically, ideally, reversal between 129.40 and 129.70 could keep the bulls, larger bulls of 128.00 in play. Yet we have no any signal as quite a negative tone still dominates on the near-term charts, indicators, and basically a loss of 129.40 could increase the downside risk, and of course a break below 129 is to open further extension 128.76 and the 128 our key support. As mentioned, the ideal reversal is still in play between 129.40 and 129.70. In case of this bounce above 130.00 would be required to confirm the bulls back in play for a possible retest of 130.70, our last Friday's peak. Descending indicators on the daily chart and the loss of momentum see not much prospect for this scenario, but it still remains on the table as the pair is still in the strong uptrend, with the latest move still seen as a corrective action as long as it stays above 128, but immediate risk now is seen on the formation of a lower top at 130.70. That will be likely confirmed on a break below 129.00. From Ichimoku studies on the downside, of course, the previous, the next support at 129.40 that marks 50% retracement is also reinforced by 4-hour Ichimoku cloud top that is at currently at 129.38. It's also acting as a quite strong support, and basically if we see the loss of both important supports at 129.70 and then 129.40, that will signal further weakness ahead. And cable, as we mentioned in our introduction, erased most of its gains from last week from the low of 3rd of October at 160.66. That triggered quite a bounce from there, triggered quite a strong recovery, but trip above 162 was short-lived. 162.16 level seen, and the subsequent sharp reversal dipped initially last Friday to 161.21, followed by brief consolidation and then fresh acceleration lower seen on the Asian session, losing 161.00 and dipping so far full reversal 160.66 against 160.69 seen so far. So we're talking about full reversal of past 3 days rally of the sterling, further weakening the near-term structure as the bounce to 162.16 and upside rejection there occurred just under a bear trend line drawn of 163.08 through 162.71, one still tentative line at 162.35, keeping the near-term bears of 163.08 fully in play and signaling for possible further retracement of the up leg from 157.53 to 163.08 with the between the 38.2 and 50% being retraced so far as the pair attempts through now 160.66 with the studies indicators on the hourly 4-hour chart, already below their midlines, and the hourly is already in the oversold territory. We might expect some corrective action, especially that we're approaching our key near-term support. Some corrective bounce is not ruled out at this point, yet no any signal has been generated showing that the pair is attempting to reverse. All the indicators are still firmly pointing lower. That gives more credibility to the recent weakness and sees potential break below 160.66 to open 160.30 zone, which is the previous peak of 7th of September, as well as 50% retracement, while loss of 160.00 would be quite bearish, as this will be confirmation of a lower top at 162.16. Actually, that will be already confirmed on a break below 160.66, and the open way for a further retracement. Our next important support on the daily chart lies approximately at 159 zone, where we have the previous peak at 159.11 and 38.2% retracement of the larger uptrend from 152.67 pardon to 163.08 peak of 21st of September, and also reinforced by sending a 55 days moving average at 158.94. So they are all around the 159 zone. Golden cross at 157.52, where the 55 days moving average crossed above 90 days, 200 days one, and the 90 days one now approaching the 200 days moving average. See more support for the pair, with the latest move lower from 163.08 still seen as a corrective. I would say the risk will be seen on loss of 159 handle, and that will basically open way for a deeper reversal and a stronger retracement of the up move from 152.67 to 163.08. As said, quite a negative tone on lower time frames keeps the downside at the beginning of European session firmly in focus, as 160.66, our key near-term support, has already been tested. More focus seen down towards 160.30 and 160.00, with the upside bounces so far seen limited above 161, where the moving averages 161.40 and 161.50. Break above these levels, along with the 161.70-80 zone that marks the previous consolidation range top, would provide near-term relief, but any reversal under 162.16 previous low, and the more important trend line resistance currently at 162.30 approximately, would be just seen as another correction. Yet no any signal given for any reversal, but just in case of any bounce, if we don't see the break above the trend line, then we'll be again talking about extension of the larger downtrend from 163.08 peak of 21st of September 2012. And the dollar yen, as we said, wow, already moved lower while we were talking. Last Friday's rally on NFP data pushed the pair to 78.86, where the daily Ichimoku cloud base limited the upside just ahead of our important and psychological 79.00 barrier, with subsequent easing being initially contained at 78.60 and then 78.50 as fresh weakness at the beginning of European session now threatens tests actually 78.30 zone, our next support ahead of key barrier and break point, also psychological support at 78.00, as hourly studies are now into negative territory, and 4-hour indicators started all to point lower, more focusing towards the downside. 78.25 is the 55 days exponential moving average, first dynamic support, as 38.2% retracement at 78.31 is now being already dented, seeing more focus towards downside, as we see as break below 78.25 opens 50% at 78.14, and then very important higher base 61.8% retracement at 78 zone, loss of which will keep the bears fully in play, will confirm the lower top at 78.86 against the 79.21 previous one of 19th of September, and then again turn focus down towards 77.42 and 77 12-hour recent lows. And dollar Swiss is recovering its recent losses on a bounce of last Friday's low at 92.73, still having difficulties on approach to 92.50 zone, whereas the 4-hour chart Ichimoku, pardon, 93.50 4-hour chart Ichimoku cloud base, as well as 55 days exponential moving average on the 4-hour chart. The recent bounce has so far retraced approximately slightly above 38.2% of the down move from 94.36 to 92.73, where the losses were contained above key support at 92.73, low of 14th of September 2012. And now we need to see break in case of clearance of 93.50 as initial barrier. This is also 50% retracement of the down move from 94.36 to 92.73. We need to see the break above 93.50 as initial barrier, and the more important 94 level, that is psychological resistance, and 200 days moving average in order to confirm the higher low at 92.73, and probably to allow for some stronger correction of the larger downtrend from 99.70 high of 24th of July 2012, and also it's at 94, currently 94.20 approximately is the main valid bear trend line of 99.70 through 98.97 and 97.96, a break of which, along with the previous high at 94.36, is required to signal further retracement of the down move from 99.70 to 92.37. Studies on the indicators on the daily chart are moving towards the upper levels, regain of momentum, and all the other indicators pointing higher. See potential for a possible stronger recovery. Of course, we need to see the break above our initial 93.50, then 94.36 in order to cluster of strong barriers in order to allow for a stronger recovery. Additional pressure on the pair was seen on the crossover of 55 over 90 days moving average. That still keeps, along with 200 days moving average that caps the upside so far, keeps the pressure on the pair, as a larger picture downtrend is still intact. As long as we have the 94.36 level holding the upside, limited break above this level is required to open way for some stronger recovery action, as so far only 23.6% has been retraced. We'll be looking for break above 94.36 to at least to see regain of 95, that's approximately 38.2% retracement, to be able to talk about some stronger recovery. Otherwise, any failure under 94.36 would risk further congestion under this level. And of course, we'll keep more pressure towards the downside. 92.73 and 92.37 recent lows will come under increased pressure in case of a failure under 94.30 resistance zone. And crude oil nearly fully retraced the latest corrective bounce of 87.69 last Wednesday's low, with the 91.81 seen so far on last Thursday. Since then, the price is in the steady descent. 88.26 was the low of this morning session so far, with the more pressure towards the downside seen on the quite negative outlook on the hourly chart. Oversold conditions might signal some corrective action, yet no any signals of reversal. For our studies are also all negative, and the pressure, additional pressure seen on the downside, as the 55 days exponential moving average on the 4-hour chart keeps the upside well capped, with the two attempts being capped at this point, with the lower one, 20 days one at 90.00, also psychological support, maintaining the immediate bears. Immediate risk, as said, as negative tone continues to dominate on the lower time frames, is seen at 87.69, to probably open the way for a further retracement of the larger recovery of the oil price from 77.27 to $100.72 per barrel, as the bear trend line of 100.72 so far keeps the upside limited. And the break below 87.69 to see the immediate target at higher platform at approximately 87 zone, loss of which will be seen as a trigger for further retracement, and 86.11 is the 61.8% retracement of the entire 77.27 to 100.72 move. Significant is the loss of 90 days moving average currently at 90.00 that currently acts as resistance along with the trend line resistance. So we have a quite good barrier at 90.00. Also it's a psychological resistance with the quite negative sentiment among the investors regarding a deepening crisis worldwide. They're seeing more pressure towards the downside, and our immediate focus lies at 87.69 low of last week. On the upside, immediate barrier is at approximately 90.00. As mentioned, it's quite a strong resistance, and a break above here might provide some temporary relief for the oil price, but overall the picture still remains quite bearish, and any gains below, I would say 93.70, 94.00 would be just seen as the corrective action with the lower resistances at 91.81, 93.30, and then we have the main ones 93.80 and then 94.00 previous range floor, break of which will bring some more positive tone into the play. Otherwise, lower targets will remain in the near-term focus. And finally, gold, that came under pressure again following posting fresh peak at 1795.70. This was on Friday, and subsequent a sharp move lower on the most likely profit taking. Actually now weakened the structure as the price broke above initial 1770 higher platform as well as trend line support, dipping as low as 1766 ahead of another important 1763 level. Set the negative tone that dominates on the hourly and 4-hour chart, with the hourlies already in the oversold territory started to point higher. We see some consolidation around these levels, but overall pressure remains towards the downside, with immediate barrier 10 days exponential moving average currently at 1773 acting as initial resistance, as both lower moving averages 10 and 20 days broke below 55 days one. They keep the with price well below them, keeping the more pressure towards the downside. As set break below 1763, the low of 1st of October is to open way for a further retracement, and the focus 1756. That's another higher platform, and approximately 23.6% retracement, with the key support at 1736. That also a previous spike low of 26th of September. Also 38.2% retracement of the upleg from 1646 to, I do apologize, 1646 to 1795, a break of which will be signal for a stronger recovery. As said, the gold returned back to the range that was established in mid-September, with series of higher highs, still not confirming the break out of the range, despite posting fresh high at 1795 and 1791 and 1795, as the quick reversal of these levels now brings the brings the price back to the mid-range points and levels, with negative tone on the lower time frames, seeing now more focus towards the downside. As said, immediate risk will be seen on loss of 1763, 1750 levels that might turn risk towards the lower boundary of the current range at the key support at 1736. Any bounce higher through 17 I would say 1780, 85 minimum is required to refocus upside barriers at 1791 and 1795. However, quite extended conditions on the daily chart as the indicators now are emerging out of overbought territory. See at this point a bit more focus towards the downside as all indicators are descending now. See more focus for some stronger correction. The uptrend is still fully in play of the recent low, the 15th of August low at 1590. However, further congestion is not ruled out, but break below 1736 would be quite risky. On the upper side, break above 1795 and 1800 will bring us next targets in play. It's Fibonacci 61.8% projection, 161, pardon, I don't have it on this level, 161.8% expansion. That is approximately standing at 1830 and will be seen as the next target in case, of course, of a break above 1795 and 1800 as this remains for now out of reach with the price focused more towards the downside and looking for test of 1663 and then 1763 and 1750 downside targets. That was all for today. I see some more people came. If we have any questions, please you can send them, submit your questions. If there is anything that we missed or you would like to answer, you can submit your questions now. Okay, we have a question for Aussie dollar, US dollar. The pair remains under heavy pressure as bounce of reversal of 106.23 peak of 14th of September has fully retraced the cycle's bottom at 101.66. Fresh low was seen this morning at 101.48. Attempt through the 3-month range floor is now evident as the negative tone dominates on the daily chart with the MACD already below and below the midline and loss of momentum sees more pressure at the downside. Initially break below the 200 days moving average at 103.44 has triggered extension down to the very strong support at 101.66. These are the two previous lows, the range floor, as the pair is now trying to break out of this cycle and open way for a further extension lower and further retracement of the larger uptrend from 79 1st of June low that peaked at 106.23. Break of the range, clear break of the range, I would say, confirmed by loss of 101, where is also 50% retracement is to trigger fresh phase lower and look for test of levels below 101 at 100, the parity level as psychological support, and then a static ones at 199.68 low of 25th of June, also approximately 61.8% retracement. As said, a quite negative tone that dominates on the lower time frame sees the downside firmly focused. Of course, there is no clear break yet on the range floor and the very strong support at 101.64. With the hourly studies deeply in the oversold territory, seeing potential for some corrective action that hasn't been materialized yet, as a brief consolidation of just 10-20 ticks has so far been moving. We need to see break at least above 102 in order to confirm some corrective action with the regain of 102.70 previous peaks, triple top of 4th of October, 5th and 5th again, to see some to trigger some stronger recovery. Otherwise it will be just a brief consolidation ahead of fresh weakness. As said, it's very important. The pair is at very important breakpoint cycle and range low, a break of which would be opening way for a fresh phase lower, and any bounce higher would be seen as just as corrective, unless we see the break above 102.70, 103.20, let's say. That will bring some more positive tone. Otherwise, firm focus will remain at the downside. Any further questions? It seems no. Okay, in that case, thank you all for being with us, and expect you, of course, tomorrow morning at the same time at 7 o'clock GMT, 10 o'clock local Cyprus time. Until then, I wish you a nice day and, of course, very good and profitable trading. Good luck.